morning, and welcome back to the Atlantic Council's IMF World Bank Week programming. I'm Alisha Chhangani, Assistant Director with the Atlantic Council's Geoeconomics Center, and today we're going to be talking about payments models in emerging markets. I'm so excited to introduce Polina Kempinsky, who is a master's student at Harvard Kennedy School, actually graduating next week. Huge congratulations.
Thank you so much.
Polina, you've been studying payment systems in both India and Brazil for the past year, so I'm very excited to jump into this research. Thank you so much for joining me today.
Thank you so much for having me.
So part of your research involved traveling to both India and Brazil to experience these payment systems firsthand. What were some of your observations from being in those countries and using those payment systems that you couldn't really see from just looking at the raw data?
So I think there are two things that surprised me the most. The first is how widespread it is. So you see that 75% of adults in Brazil are using Pix. You see the number. But then when you walk down the street, you see a Pix QR code everywhere or a Pix number everywhere. The same in India. You see it in every store, in every shop, in every market. And that, to me, was really exciting. I don't think I understood how widespread it is. The second is the strong sentiment that consumers have about it. So when I'm using my credit card here in the US, I don't really think about it. But when you're talking to people in India and in Brazil about Pix and UPI, they have a lot of feelings about it. They would tell you about how it was founded and how they used to carry cash and how they're not using cash anymore and how meaningful that is in their lives. And that to me was really interesting, and the sense of how a public financial infrastructure is so impactful for someone who's just using it.
That's such an interesting finding. Yeah, I never think about, I'm giving my credit card and someone, I'm not super excited about it. So in your paper, you compare Pix's payments first approach to India's UPI model, which was, a digital public infrastructure model. How do you think both of those different approaches are shaping the entire financial ecosystem in both those countries?
So I like to think of Pix and UPI as distinct stories. So let's maybe start with a Pix story. We're talking about Brazil around 2016. And what you see in Brazil is a strong pro-domestic sentiment, both in their financial system and when it comes to fintech and to tech in general. So you have neobanks and fintechs that are really growing in the country. And you also see this need to transition away from cash, and the BCB is starting Pix. And they're starting Pix to support their local ecosystem. The best example for that is that in 2020, they blocked WhatsApp from entering the market and providing fast payments. But then really quickly, they launched Pix. And you really see how the cooperation is growing over time. And over time, they're sort of incorporating more and more features that the market needs, and the cooperation is strengthening. And at the end of the day, neobanks and fintechs are really strong in that ecosystem. And when you talk about fintech in general, you really look at Brazil. So that's one story, and that's how the market was shaped there. India's story is a very different story. So around 2010, the government starts seeing that there is a massive leakage in service provision. So about 20 to 40% of services are leaking when you're thinking about cash transfers. And that's an incredibly big number. And for that reason, they understand that they need to really take care of the entire infrastructure. And that's why they're launching DPI, Digital Public Infrastructure, including an identity pillar, a data sharing pillar, and UPI, the payments pillar. And they need a really quick scale up to a really big piece of land, to a lot of different people. And they're introducing a no-fee system because the consumers are very price sensitive, and because they don't have this very strong pro-domestic sentiment, the players that end up entering are those who can afford payments as a loss-leading product for a little while before they start leveraging data and other mechanisms for revenue generating. And then you see Google Pay and you see a Walmart-backed player there. So you really see how choices that were made early on really impact the entire story and how the market was developed after that.
Right. So maybe my follow-up question to you is, do you see any sort of long-term benefit from building that entire stack, maybe India's model that you were just talking about, than just starting with real-time payments? And maybe what are the trade-offs that you've seen?
Sure. So I don't think there's one sort of one-size-fits-all answer here. So, and you also need to keep in mind that you could start from one thing and there are transition costs into the other option, but you can do it. It's not a set-in-stone process. I would say that you need to be able to answer three key questions when trying to choose which one of those. And that's me being much of a consultant. The first is, what's your current starting point? So if you have a consumer walking into a bank and the bank can't identify them with any digital means, you probably need to develop a digital identity pillar and do something that's more of a DPI. If you have that, you probably can do more of a narrow payments approach. So that's the first thing. The second is how much time do you have for this to be impactful? So if you see credit cards scaling at a rapid pace, or if you're seeing mobile network-based payments scaling, you might not have the 5 years that you need for a full DPI, and you need something that's quick. And then you go for a leaner system. And then the last one is how many costs can you bear? And if you're a smaller economy, your cost per consumer is going to be higher, and then you might consider something that's narrower. Or if you really need to push things forward and you have a lot of money to spend on this, you might go wider. So those are the questions I would think about when trying to choose one or the other.
Yeah, and that's a really good outline, and I think makes a lot of sense. Something that I found really surprising in your research is that both countries actually saw an increase in credit card usage after the introduction of both UPI and PIX, when a lot of these systems are supposed to reduce dependency on traditional banking fees. Why was that? And what does this say about consumers interacting with legacy tools versus newer, technology and models?
So that to me was one of the most interesting findings of this,
great.
because it really surprised me. And to try and understand this, to me, you need to sort of step into the shoes of a bank or of a financial institution. So imagine you're a bank.
Okay.
And you're a bank in Brazil, and now all of these new consumers and merchants are flowing in, setting up accounts, and you're not really making revenue off them because the payments are free, and those are very small numbers. And so over time, you start getting to know them, and you start generating revenue in other ways. So you're starting to offer insurance if your regulator lets you do that. You start maybe offering loans because you know a little more about them. And in the back of your head, you have this, I've worked with credit cards in the past, and credit cards for each individual payment for you as a financial institution makes more sense because you have transaction fees that are higher, and consumers can enjoy the credit part of a credit card. And so you start offering that to cohorts of consumers. You start maturing them into that. You start graduating consumers into credit cards. And on the consumer side, and you really see it from a research that was done in Brazil, they're saying, I'm using PIX to pay for my groceries and my everyday spending, and I'm using credit cards to pay for my new fridge that I need, where I need this credit component of it. To me, what's really interesting is gonna be coming back there in 5 or 10 years and trying to understand what's the steady state that we've landed in. One option would be PIX and UPI were transitional products to introduce people into the financial system, and now it's just credit cards. That's one world. Another world would be a midway of what we see right now in Brazil, but for a wider share of the population. And the middle is probably where we'll actually land. Okay. And for policymakers, I would take that into account when launching those systems, because I felt like people who were launching PIX and UPI thought that they're creating an alternative for credit cards. But in essence, what you're seeing is a complementary product in a lot of ways.
And consumers like optionality. They like to, use credit cards when they need to, and then use these systems when they want to, right? So it makes sense.
Absolutely.
As more countries explore fast payment systems, what lessons do you think are truly universal for all central banks? And what do you think need to be adapted for local realities or, local users and consumers?
So there's one thing that's truly universal, and that's the fact that you need to force people to play with you. So what worked for Brazil and for India is the fact that they enforced the participation of large payment institutions, and then the entire market moved with them. And for other systems that tried doing the same thing without enforcing participation, that really didn't work. So that's the universal lesson. Okay. But you also have, to me, 3 local lessons of things that you need to adapt. The first is the question of need. Do you actually need this? Are there credit cards in your market? Are there mobile-based payments? Try to figure out where your market is. So that's the first question. The second is your market structure. Different markets have different structures. Do you have hundreds of banks? Do you have 5 big banks? How are credit cards playing into all of this? Where is the central bank located compared to the system? So that is gonna inform the system in which you're operating, and you really need to think about that. And the third one, and that to me is the most interesting one, is externalities. Okay. Once you introduce fast payments, you're gonna see fraud. And you're going to have to deal with that. Yeah. But there are also externalities that are a function of your legal system and of your culture and of other historical contexts. And Brazil and India both have really interesting examples of this. In Brazil, there were legalized gambling when PIX was launched. And at some point, the share of transfers through PIX that was for gambling was actually 20% of financial transfers, of the biggest financial transfers program in the country. So that's a very big bulk of money. Yeah. So that's the first part there, and you really need to think about it. In India, you see impacts on women. So loss of financial independence, because if you have one phone per household, you're going to lose that financial independence. But you also see women incorporated in the financial sector, and that's great. So you really need to think about that from the onset and come back to that question the entire time, when you're developing, and then once it's developed and you're just operating it.
Yeah, and when you were doing your research, you brought up the point about women in India, and I thought that was a really fascinating finding about this externality that you're talking about, where you don't know what the impacts are going to be.
So it's really interesting to see women talking about how they used to have cash,
Yeah.
and then there was a demonetization.
Of course, yeah.
And so a lot of women lost cash because they were hiding that cash, and so they could deposit it anywhere. But you also see women who are enjoying the fact that they can now feel comfortable walking around the street after a day at the market because they're not carrying cash. And I don't think there's a right or wrong answer here, but rather try listening to your constituents, try listening to think tanks, try listening to other ministries when you're setting this up, because they probably have thoughts about how to set such systems up in order to make sure that your vulnerable populations don't create losses for this.
So I know you've given us a lot of questions to ask, but I'm going to ask you to come up with just one. Sorry to do this to you. But if a government was coming to you today, what's the first question they should ask before implementing a fast payment system? The first thing they should ask.
Do I actually need this?
Yes.
And that's the first question that you have to ask. And as I said, do I have any alternatives? If I have alternatives, I might not need this very expensive toy.
Yeah.
What will happen by the time I'm done?
Okay.
So am I going to have blockchain that's going to replace this, and I'm not longer going to need this? And can I solve my problem in another way? So if my biggest issue is that merchants are not getting paid on time and they're experiencing a lag of 2 weeks in getting paid and therefore taking loans and it's slowing down my economy, maybe the solution is not fast payments, but rather shortening credit cycles. So if all of those still give you a yes, I need it, then you probably should start thinking about all the other questions.
Okay, that's super interesting. So Polina, I learned so much from your research, and I know here at the Atlantic Council this is so valuable, and we're going to be taking a lot of your findings back. But for a policymaker, what's one thing you hope that they take away when they're thinking about this research?
So the one policy-oriented thing is how short-term decisions really impact your long-term, and you see that in the different stories of India and Brazil. But also take the beauty of regulators that decided to do something and change the lives of their citizens. And that spirit, to me, is something really exciting and really inspiring. And I would actually hope that people reading this research take this with them.
That's such a beautiful way to end our conversation. Polina, thank you so much for joining me today. And you can find Polina's research at the Atlantic Council homepage. Excellent research, and we're so glad to work with you so closely on this. Thank you so much for joining me today.
Thank you so much for having me.
Next up at the Atlantic Council headquarters at 10:30, join my colleague Charles Litchfield as he gets into a conversation with South and Central Eastern European Economic Dialogue. Really looking forward to that event. Thank you all for joining me today. Thank you, Polina. Thank you so much for watching.